You need to realize that the more diversified your portfolio is, the less risk you're taking. The less risk you're taking, the less returns you'll get. The more concentrated your portfolio, the higher risk you're taking, the higher returns you can potentially get, but more money you can potentially lose. That's the whole thing you need, and that is a real constant juggling act. You will need to find out where you're comfortable, what the right thing for the market is, what's going on in the market. This is why there's always desperate desire to know what's going on. You know, the whole industry is driven by what's going on and need to find out, because you need to know whether ahead you're going to have some speed bumps that's going to affect your portfolio, and you need to know whether your risk levels are too high for that. And you'll keep adjusting your risk levels up and down accordingly, according to what you think is going on. And again, this is the other thing, is we talked a little bit about this before, is if the news flow or the price action or something has changed, then you may change your risk level. Don't say, because I thought this in the beginning and I was going to risk 3% or 5% of my portfolio, that because suddenly something's changed, you have to stick with that. No, if you say, oh, well, that didn't quite happen as I imagined, but your whole premise is not over, just part of it, cut the risk down to reflect that things have changed. You should be always reflecting whether things have got better, worse, incrementally in your portfolio. And that way you're dynamically in control of the risk. And that's the important thing. You need to be dynamically looking at this. It's just not a one fixed thing, leave it, walk away. You can do it like that, but it's not the best way. The whole business of investing is about probabilities. It's all assessing whether probabilities have changed or not. If the probability of a recession is increased, how's that going to affect your portfolio? Maybe you're going to have to sell some market exposure against it. If the probability of recession has come down, maybe there's a chance the market will go up, so you will adjust it. It's all about the probabilities, and those probabilities change constantly, and that's something you'll have to bear in mind. Everything that you're looking at, the probability is always moving around. And look, there's no quick answer or real answer what the probability is. It's what your perception of it is. You may be wrong, you may be right, but if you stick to that and realize you want to keep assessing, but don't, whatever you do, overtrade. If you overtrade, you'll lose money. It's almost certain. You know, stick with your ideas, base it on a underlying principle of what you're trying to achieve, what you're trying to risk. And then if it does change, trim it around, but don't keep trading in and out, because you will kill yourself. Everybody I know who does that loses money. So just avoid doing that. Don't keep turning over your portfolio, but tweak it around and be intelligent about what you're trying to do. The other thing is, some people are great at taking risk. Some people don't mind having 2 stocks in their portfolio, and they can manage it, sit on it, and sweat it. Other people can't. Other people are more conservative, and they don't like taking big risks. That's fine, and I'll show you why it doesn't really make a difference. Because the guys who move up and down a lot, over average, may make a certain percentage return. The people who don't move up and down a lot, over average, will also make a certain percentage return. Not necessarily will they make more or less over time. The big swinger will make quick profits, but he'll lose quick money as well. So it's a balancing act, and that can be fine. If it's an aggressive position you want to take based on something you know, you can take risk. Don't worry about it. But realize that over time, you're better off to be slightly more diversified, because otherwise you're out of the game too quick. And as Anton said, it's all about coming back tomorrow.